Mortgage Consultant. This show is your ultimate guide to mastering the art of real estate. Dive into the world of immigration, mortgage solutions, home remodeling, insurance, real estate planning, and the ancient wisdom of Vastu. Elevate your living and make informed decisions with the insights and strategies shared by Nagaraj Annaiah. Stay tuned for an enlightening experience.
Hello, Bay Area. Happy Friday. I'm your own Nagaraj Annaiah, Bay Area Realtor. This is the only show in the Bay Area where it does educate and enrich in the real estate. Today, I'm joined by April L from Lone Lock. Hi, April. Welcome to the show.
Hi, Nagaraj. Thank you so much for having me.
This is the only show, April, like we bring in all the experts on the real estate industry and we talk about the different aspects. So last week I had an expert from immigration and other weeks we had an experts on the remodeling. So this show is all about educate and enrich. You might be the home buyer or a seller who is on the line to do something but not ready, but you can still listen to this show so that you can get enough knowledge on the real estate so that whenever you're ready you can make a quick decision. Hi April, so today like let's talk about, I know you come from Orange County.
Yes.
You come from Orange County, but you do loans all around the California. But before that, let me give you the studio line numbers. Our studio line number is a 408-912-5038. Any question on the real estate, or like you are one of the home buyer who are confused on the mortgage, which product to choose for, you are something like you put an offer, appraisal didn't come out, right? You have something in going on through that, anything on the real estate, give us a call. Our studio line numbers are 408-912-5038. Today I'm discussing with April L. She's from the Loan Lock. She's a mortgage consultant. She has a great product for the first time home buyers, investors, second bow home buyers, and everything. Anything, give us a call. April, I know you come from Orange County. Is Orange County also is like crazy like a Bay Area real estate? How is it? Let's talk about that.
It's crazy, but not as crazy as Northern California. So you guys, most of your offers are 21 days or less and don't have contingencies built in. We have a little bit longer escrows, maybe 30-day, and we have contingencies for loan contingencies shortened, but we still have them in place.
See, we are Bay Area. We always have high prices, low inventory. We come from tech industry, right? And we have a cash buyers out there, quick sales. Everything should be quick because our softwares are like that, right? So that is why, listeners, you are listening to Bay Area Real Estate Playbook from Nagaraj Annaiah. If you have any questions on the real estate, you are one of the home buyer who doesn't know what about the mortgage stuff, right? You can give us a call. We are talking about the mortgage stuff today all about, right? I think if you have any questions, give us a call. Our studio line numbers are 408-912-5038. I'm your own Nagaraj Annaiah. I think April, you mentioned contingency. What is contingency means? Can we talk about the contingency first? Right.
Sure, absolutely. You probably with contract language can probably explain that a little bit better.
Yeah.
But usually there's the loan and appraisal contingencies in place to protect their earnest money.
And one more is inspection contingency, right? These are the three contingencies. Whenever you put a contingencies in the contract saying that if any of the things like inspection works out, like if you don't like the inspections after the offer accepted, maybe you back out. Loan, you basically loan doesn't come out or a mortgage doesn't come out, we go for a backward based on the, basically you open up the negotiation again with the seller, right? That's what you do. And the third one is appraisal. I think today let's talk about the appraisal, right? Lot of Bay Areas right now, I think you also know, I think last week I was discussing one of the home which was in the Fremont. It was like listed for 1.3 million and we went into a contract for 1.77 million, guys. It's a 1.77 million. That's a 470K more than the list price. And April was looking at the appraisal report and she was looking at one of the photos. Baapre, like, did you give so much price for that home? That's what she was telling me. But that's all about we pay for the location, April. I think
Yep,
it's only location matters in the real estate. Okay. If the
absolutely.
you also know that, because the same home might be in some other part of the country, we might not pay for it. But in the Bay Area, because of the location, all-time low inventory, okay, and all the stock markets are booming so much. On top of it, cash buyers. On top of it, two incomes in the family, which is like both of them are a software engineers. That's everything rocking out of the, like, basically knocking out of the floor, right? Like that's what it is happening right now. So let's talk about when the appraisal doesn't come out, right? What does it happen, right? Like what does the home buyer does it? Can we talk about that, April, on that more?
Yeah, so in the one Fremont case, it came in, I believe, at 1.69. Purchase price was 1.77. And so he was going to put 20% down. And in order to make everything work, there were some home improvements that he wanted to do once he moved in. So we were able to back it up with a 10% home equity line. So he could only have to put down 10%. But it's always based on 10% of the appraisal value, not the purchase price, because that's the value of the
Let's
property.
let's revisit. Appraisal value is 1.69, correct? That's what it is right now.
Correct.
So you put 169K as your down payment now.
So 169 is the value of the property. Now that becomes, when you're doing an 80% loan and doing a 10% loan, now that becomes the basis for the loans, or the value for the loan to value of the loans. So we were able to do that. Fortunately, he doesn't have to bring in, he's actually bringing in less than he originally decided to. But it was a really great option to help him mitigate that, because he did not have an option without those contingencies to back out without foregoing his earnest money. So it gave him an option to move forward, which he was comfortable with, and to get the home that he really wanted.
So basically, listeners, you are listening to Real Estate Playbook. I'm your own Nagaraj Annaiah, and I'm having a conversation with an April Held. She has a great products for the first-time home buyers and investors, and even the buyers like who wants to buy a secondary home, and you are one of the home buyer, and whatever, sometimes some of the words like HELOC or something which are we are talking as a new things, or like you are not like you have something on the real estate, you can give us a call. We are live on Wally 92.3, and our studio line numbers are 408-912-5038. And all these recordings will be uploaded on my YouTube channel, and you can watch it at Nagaraj Annaiah handle. And when you watch this, you can say hi to April's one more colleague next to her, which you can't see now, but you will be looking at when you do it.
Yes, I have a couple of lazy assistants.
Yeah, so you can watch her assistants also in the in our YouTube video recordings. That's great thing, right? Like our studio line numbers are 408-912-5038. That's a well said. Like, see, a lot of people just shop around the rates. This crazy real estate market, the rates are not the only thing. If the appraisal doesn't come out, right? I know you guys have a great interest rates compared to all of the out there, because a lot of, I think you have the great interest rates what I've shopped around right now. I think how is the rate right now, April?
They're great. We have rates as
Let's
low
take one caller,
as
April. Hi, welcome to the Real Estate Playbook.
Yeah, hello. I have question about like some of the refinancing things I'm considering.
Correct.
I bought home last year in 2023. I got one main loan and one HELOC. So now during this period, my home value has increased. At least on Redfin, it is showing me it has increased quite a bit. So I was thinking to refinance it. One question is like, what would be kind of right time? Like, because my interest rate might be coming down. So what would be right time? And then now, if I refinance, can I consolidate my HELOC and this main loan into one loan? And because the home value has increased, would it be considered like now it is like more than 10% increase. So would it be considered that I did 20% down payment or something like that, which will help me in interest rate?
That's a great question. Sorry, I didn't get your name.
I'm Jay.
Yeah, hi Jay. I think April, it's for you. It's a great, I think this is the most common asked question nowadays for you.
Yep. What do you anticipate the property value to be?
So I got it for like 1.25, and now the value is like 1.53. It is showing me on.
Oh wow. Yeah. Yeah.
See, that's a
My-
Bay Area real estate, April. I think you can't compare Bay Area to anywhere in the world.
Yes, even during 2008, your values did not drop that significantly. So, but was your first name, was it Anjay? Is that correct?
Jay.
Jay. Okay.
Jay.
It sounds like from the numbers that you're giving me, I'm assuming you might have put something like 10% down on the purchase.
Yeah, I think he did a 10%. Jay, are you there still?
Yeah. Can you hear me?
Yeah, go ahead, Jay. So
yeah,
you did 10% down, right?
Yeah.
Yeah. So it sounds like from the numbers, you would be able to refinance and put those together, because basically you just need those to be 80% loan to value or less. You can also subordinate if the appraisal didn't come in the way you wanted it, you could keep part of your home equity line. There are different ways that we could do it, but the timing, so price definitely rates have come down. What rate do you have right now?
That's a good question.
It's quite high actually. I have 6.8. Sorry, main loan is 6.8, and HELOC is variable rate, so it's around 9.
So I'm sorry, the six. Did you say
6.875 and a 9%? I think that's what he has. The first one is a 6.8.
Correct.
Yeah.
Okay.
Correct.
Yeah. Yeah. So there are different programs. I would say, you'd want to go down at least 0.5% probably, which with some of the loan programs we're definitely sitting that low. So the timing for me is, when are the rates going to be the lowest? Well, we don't know that, but it also could be when the rates are the lowest that potentially values could change too. So we have really high values right now. So you can put those two loans together because of your high value. Well, when the rates, if they do come down further towards the end of the year, what are the housing values going to do? That's the part we also don't know. So,
but how are the refinance rates right now, April?
I think they're fantastic. I mean, they're 6.125 on some of our specialty.
That's a great, right? He's better candidate for the refinance.
Yeah.
Jay, you can reach out to April after this, so you can save around what, close to $500 to $600 easily. Okay, looking at your stuffs, I think you should first call April after this, or reach out to her. I'll give her the number after the end of the show. During the end of the show, do reach out to her. It's a time to refinance for you, especially.
That sounds good. One quick question around that. So, is there a penalty if I do multiple refinances? This is my primary house.
There should not have been. Most loans do not have any prepayment penalties on them these days. So chances are you don't have it, and you can refinance them when you want to. That's not a problem.
So to add more onto this, Jay, see, for primary residence, 99% we don't have the prepayment penalties. What I've noticed, only in the business loans, like a small business administration, or if you're doing a commercial loans, right? That time it is like you come with the prepayment penalties. But most of the 99%, right? You should not have a prepayment penalties. You can do a refinance enough number of times. For example, April is giving a 6.125 right now. But maybe in a 1 month, you might get a 5%, you become a lucky, right? So you can still refinance it. Nobody stops you. That's the good thing about the primary residence purchase or any home purchase.
And the closing cost will not be marginal?
Yeah, I think that's a good thing. I think April can talk about that.
Yeah. So it depends on the rate that you get, but I would say generally speaking, if you're just doing a rate without a buy down to buy it down lower, you're probably looking somewhere around $3,500. And usually
Let
that
me
can be
talk.
rolled
I think
into the
we
loan
can
amount.
put it in a better way. See, it's always see, for example, Jay, like if you do a 6.25, you get some credit. I think depends on the lenders also, right, Jay, April. I think maybe as April said, 6.125, you might be paying a 3,500. If it's a 3,500, it's a good number of like within a 4 months or a 5 months, you can recover that.
Exactly. And I always cover usually do the break even point. So it makes sense to see where you're going to break even.
So you can get the paid or like basically call to April, talk to her, give her complete the application. You can basically reach out to her, and all the application link I'll leave it out in my YouTube channel also. You can reach out to her, and you can reach out to her after this show also. Thank you so much, Jay. And any other follow-up questions do you have?
No, I think it's good. Thank you so much for all the detailed answers. Thank you.
Thank
Thanks
you
for
so
calling,
much,
Jay.
Jay, and best of luck. Listeners, you are one of like Jay and you want to understand something on the mortgage, like you want to do a refinance or like you want to purchase. Where do you get one show with a realtor, with a mortgage consultant or a mortgage lender, right? This is the show is all about educate, enrich, real estate playbook. Give us a call. Our studio line numbers are 408-912-5038. April, I think we were discussing about before, Jay, about the appraisal doesn't come out, and if the appraisal, because in this, not only that house, I'm seeing enough number of houses nowadays. What's happening, right? Some of the realtors are coming out of from the nowhere from like Bay Area. They're blindly closing the eyes and writing the offers. Like sometimes I'd seen one in a Livermore house, like it was a 1.4 million listed, but it was sold for 1.75. The appraisal might have come only for 1.5. Right, you are fighting with a lot of number of people on the home buyers case, right? Like, so in that case, if the appraisal doesn't come out, so you should, when you're choosing a lender especially, you might have like not only at rates, you need to look about for other number of other than shopper. We have one caller, let's take it up. Hi, welcome to Real Estate Playbook.
Hi, this is Naveen here. Do you hear
Hi
me?
Naveen, welcome to the show.
Hey, Nagaraj, thanks for the show, and hi, April, thanks for the show. I had a question with regards to real estate investment in the Bay Area. So, off late, I've been hearing a lot about areas in Manteca, Lathrop, River Islands areas.
Yeah.
But I'm not sure if it's really worth investment wherein you get rentals as per the number of new homes that are being built.
Got it.
What is your opinion on those markets for investment purpose?
Naveen, it's a great question, Naveen. I think recently I was able to close one in River Island. It's a lakefront house. I think April helped me on the basically on the loan part also in there. I think she was doing it as a secondary home. Okay, the secondary home rates are a lot better when you buy compared to investment properties. How was the rate for the secondary homes, April, for that home?
It was actually the same as, I believe it was a 6.125. It was same as primary
So
because
in this case, right, like it makes sense you can buy around River Island, Lathrop, like Lathrop is also part of it, Manteca, right? Like when you are doing enough down payment, for example, you can, for April's requirement, she needs only a 20% down, but you need to show as in a secondary home. What kind of homes qualify as a secondary home, April?
so usually it's something that it has to make sense that it's either a resort location or maybe somebody has family that lives somewhere. So it just kind of has to make sense that it's not going to be a rental if it's a secondary home. So the underwriter's just looking for that.
Okay. So once if you qualify for the secondary home, right, you can basically get a better rates. Once you get a better rates, then basically the rents like my client who bought it recently, they bought it for like 1.15 lakefront 3,500. There are only few homes, lakefront homes in the Lathrop prior nowadays. Like lakefront comes like this, goes like this. That's same thing as a South Bay right now. Okay, so he was able to get it for 1.15 and he did a 70% down or something. Then he got a 4,000 rent. So to buy a secondary home or even the investment properties in around that area, if you're doing more down payment, it makes sense. Or at some point of the time, if you're able to pay off some of the money, right? Then it makes sense for you. Otherwise, it would be tough if you're just doing a 20% down, Naveen. So, are you there, Naveen? I think we lost Naveen.
Hello.
Naveen, yeah, Naveen, go ahead. Do you have anything follow up
So
on
I had
that?
a question. So talking of this, if I'm going to go as a secondary home, is it something like it's my primary usage, right? But technically, it's not my own usage. It's going to be given for rental. So would it be subject to any audit or something in future?
Not necessarily, but usually sometimes people use it part-time for their own residence, and other times they do rentals. The one thing though, if you do it as a secondary vacation home, you can't use the rental income for qualification. So sometimes people need that. If they're doing it as an investment property, they're going to need to use the rental income for qualification. In that route, you would definitely need to use a investment property loan instead of second home.
So that makes sense, right? Like Naveen. So that's how you need to you see. There are a lot of lenders say ask for 30%, but 20%, if you are qualifying it, you can go get it. But see, look around, the property value is always appreciated, even in the Rathrop or River Islands. River Islands, lakefronts used to be 850, 900. That's what I had seen. But now recently, whatever I had closed was 1.15 for a 3,000 square footage. There
Correct.
is
That's what. There's a lot of hype. So I'm just interested to know if it's really is there a
this is
demand
what
for so many new homes being built. The sense it shouldn't be a situation wherein you buy it and if it's for your primary usage, that's fine. It doesn't matter, right? But if it's especially you're expecting as an investor and you don't have occupants to take up the property, then it's going to become a liability more than an asset.
yeah, that's a great point,
I
right?
just
Like,
wanted to
see,
understand how is the market trend of Lathrop and the River Islands area.
see, that's what I told you. This home, whatever we bought it, within a couple of days, we were able to rent it out. Okay. It depends on the location where you buy and how much is the rental turnaround what you get, right? Like, for example, this house I was able to get it for $4,000. So depends on the location actually and the type of the home and how much down payment you have made. And coming back to a number of homes built around, I think still the number of homes built around are less nowadays. Even the 2,000 square footage lakefront newer homes are costing you more than 1.1 million. Newer homes are not cheaper in the lakefront in the River Island nowadays. It's our expensive part because nowadays the labor are going up, everything is going up. So since it's going up, the prices will go up itself. The older homes are the one which you can basically buy it for a good price. If you're looking for a longer front, right, or longer duration, it makes sense for you. But if you're thinking for a 1 year, 2 years, it might not work out for you. Okay.
Okay. Okay. But in general, the Lathrop area is better than Manteca, right? From an appreciation stand.
That's what I've seen right now. Lathrop has basically gone up on the prices compared a lot more than to Manteca. That's what I've seen around.
Okay. Okay.
Thank you, Naveen. Thanks for calling in. So, April, it was a great discussion all about, I think, the coming down to the appraisal value, right? I think let's touch upon that. If the appraisal doesn't come out, what do we do in this case? I think we can just revisit on that part, right? Like one is look for from 20%, make it to a lesser 10% and arrange a difference.
Correct.
Correct?
And the good thing about that is they can always pay that off later if they want to. It's just a home equity line. So if they want to get
That's
rid
a
of the
good thing,
payment,
right? Like
they pay it down. They pay it
yeah.
off.
Yeah. I think that's a good thing because home equity line you're borrowing and anytime you can pay off and there is no prepayment penalty, guys, for the HELOC, right? But only thing is, for example, you don't have enough funds now. Maybe you can do in this way. So it was a thank you for all the listeners who are calling in, who called in today and encouraging for us. We come on every Fridays. I bring in a different experts on the real estate. On Sundays, I come on 12:30 to 12:55. That's only about Bay Area real estate, like what's the trend is happening around we discussing. April, you can give out your number so that listeners, Jay and others, Naveen, if somebody wants to contact you, they can always directly contact you.
Sure. You can reach me at 949-306-8100.
Okay. And all these recordings will be uploaded in my YouTube channel, Nagaraj Annaiah, and you can watch these recordings and always encourage me. And thank you so much for each and everyone for encouraging us. And we will see you soon on Sunday, 12:30 to 12:55. Thank you so much.
Thanks, Nagaraj. Have a great weekend.
Thank you.